legit. Anything you want.
Top 5 Dividend Growth Stocks for 2019. Last year was a wild ride for U.S. investors, with domestic equities hit by higher volatility coupled with a precipitous drop in prices in the last quarter. A combination of factors including a deteriorating trade relationship with China and impending rising interest rates have negatively impacted the equity markets. Faced with increased uncertainty as they move into the new year, investors might need to analyze their existing portfolio and formulate new portfolio strategies to meet their financial goals for 2019. Given this backdrop, investors may want to consider significant body of research suggesting stocks that have consistently grown their dividends have historically outperformed all other categories of stocks. Furthermore, the research team at Reality Shares found that companies with the highest dividend growth rates have historically outperformed the S&P 500 than more, as shown in the figure below displaying the 5-year annualized total percent return relative to outperformance or underperformance of the S&P 500, for different types of dividend-growing stocks. Each quintile represents 20% of the total group of stocks being analyzed. The top 20% quintile 5 shows that the highest dividend growth stocks outperform the S&P 500 by over 8%, while the bottom 20% quintile 1 shows that the lowest dividend growth stocks underperform the S&P 500 by almost 2%. Although there are many dividend growth strategies available now, most strategies available to investors are based on a rear-view approach, looking at historical dividend growth, not a company's potential for future dividend growth. In an effort to identify stocks with the highest dividend growth potential, Reality Shares developed DivCon registered trademark, a dividend health rating methodology. IVCO utilizes a set of underlying fundamental factors to evaluate dividend-paying stocks in the S&P 500 and rank their dividend growth potential for the next 12 months. Using DivCon to uncover stocks with the highest potential for dividend growth, here are my top 5 dividend growth stock picks for 2019. Symbol, VNYSE Sector, Finance Credit Cards, Transaction Services DivCon Rating, 5 out of 5 with a DivCon score of 70. Visa is the top stock pick for 2019. The stock has been rated DivCon 5 since 2017. In 2018, the company outperformed with a total return of 16% compared to S&P 500's negative -4% return. The DivCon methodology also looks at the earnings and free cash flow, the driving factors behind dividends. The company's dividends were supported by 35% earnings per share growth compared to 2017, while its 5-year annualized growth stood at 21%. Similarly, free cash flow had a growth of 41% compared to 2017, with a 5-year annualized growth rate of 36%. Additionally, Visa has been increasing its dividends consistently over the last decade. It has grown dividends at 20% compound annual growth rate CAGR over the last 5 years. In 2018, its year-on-year dividend growth was even higher at 27%. Its free cash flow was at a comfortable level of 5 times dividends. Also, Visa's dividend payout ratio, the share of earnings paid out as dividends, was low at 19%, providing room for future dividend growth. 2. Ross Stores DivCon score, 69.5 Symbol, Ross Nasdaq Sector, Consumer Discretionary Retail DivCon Rating, 5 out of 5 inches a close second, with a DivCon score of 69.5, Ross Stores is the next top dividend stock pick for 2019. In 2018, the company had a total return of 5% compared to S&P 500's negative return of -4%. In the last 5 years, the annualized growth rate of stocks' free cash flow and earnings per share stood at 19% and 14%, respectively. Ross Stores has been increasing its dividends consistently over the last 24 years. Its 5-year annualized dividend growth rate was at 21%, while the last year's growth rate was even more impressive at 41%. Ross Stores' free cash flow was at 5 times 2018 dividends, while its dividend payout ratio is a low level of 18%. 3. NVIDIA Corporation DivCon score, 68.75 Symbol, NVDA Nasdaq Sector, Technology Microchip DivCon Rating, 5 out of 5 with a DivCon score of 68.75. My third top stock pick for 2019 is NVIDIA. NVIDIA was featured in my lists for both 2017 and 2018, and continues to have a strong dividend growth outlook as we enter 2019. Historically, NVIDIA's stock has been up by over 300% since 2016, despite falling by 32% in 2018. Considering the company's strong fundamentals, the recent stock price decline might provide an attractive entry point for investors. DivCon's methodology still ranks NVIDIA as a DivCon 5 stock, with strong dividend growth potential over the next 12 months. This is because the stock's cash flow and earnings per share grew by over 90% compared to last year, with a 5-year annualized growth rate of 41% and 22%, respectively. NVIDIA has been increasing its dividends every year since 2012, with a 5-year annualized growth rate of 14%. Despite 2018's drop in stock price, the stock still shows strong dividend growth potential with free cash flow at 9 times dividends and a dividend payout ratio of 11%. 4. Domino's Pizza DivCon score, 67.25 symbol, DPZNYSE sector, consumer discretionary restaurants DivCon rating, 5 out of 5. The fourth stock in my 2019 list is a well-known name, Domino's Pizza. The world's second-largest pizza chain has a DivCon score of 67.25. In 2018, the stock delivered a total return of 32%. In spite of the rally, the company has a high likelihood of dividend growth in 2019. Looking at Domino's fundamentals, its earnings per share and revenue grew at impressive rates of 24% and 11%, respectively, over the last 5 years. Over the long run, Domino's annualized dividend growth rate has been 22% over the last 5 years. The future dividend growth is supported by 45% earnings per share growth compared to last year, a free cash flow to dividend ratio of 7 and a comparatively low dividend payout ratio of 30%. 5. United Healthcare DivCon score, 66.5 symbol, UNHNYSE sector, healthcare managed care DivCon rating, 5 out of with a DivCon score of 66.5. My fifth top stock pick for 2019 is the managed healthcare firm United Health. In 2018, the company outperformed the S&P 500 with a total return of 14%. The company exhibited strong growth characteristics with free cash flow and earnings per share growing by 43% and 32%, respectively compared to last year. United Health has also increased its dividends every year since 2010, with double-digit increases each year. The company's fundamentals support strong dividend growth potential. The free cash flow is at 4 times dividends while the dividend payout ratio is at 26%. The attractiveness of dividend growth for 2019 and beyond. While stocks with high dividend payouts, or high dividend yields, can be attractive, Reality Shares research indicates that stocks with higher rates of dividend growth have often outperformed the market. Investors primarily chasing yield could fall into a dividend yield trap, especially in volatile market environments. The stocks selected by the DivCon system have better growth and quality characteristics. Using a dividend growth tool like DivCon can provide investors with an opportunity to potentially outperform the markets in 2019. And if outperforming the markets is not a good New Year's resolution, I don't know what is.